Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is July 26, 2023. Overnight, we saw the Australian CPI for the quarter come in less than expectations, and that helped to push the Aussie versus US dollar to the downside. However, there's some limits to that move to the downside, some technical limits that stall the fall. There's also been some upside resistance as well as we head toward the FOMC rate decision. Let's talk about this currency pair from a technical perspective as we move closer to that rate decision. As mentioned, the CPI data came in weaker than expected, and what we saw in the Aussie versus US dollar is this sharp move to the downside here. That move to the downside moved below the 100-hour moving average. That's a blue line in this chart. But we did find support buyers early ahead of the 200-day moving average. That 200-day moving average currently comes in at 0.67222, and we saw a rotation back to the upside going back in time. If we look at the low price from yesterday and we look at the low price from Monday's trade, we did get below the 200-day moving average on Monday only briefly before rotating, and really the last 1, 2, 3, 4, and now 5 more recently lows have all found support buyers ahead of that 200-day moving average, with the most recent low coming in around the 0.6733 area or 32 area, about 10 pips short of that 200-day moving average. So we are seeing some support buyers against that level. Going into the FOMC rate decision, if the price is able to move below that 200-day moving average and then get below the low price that we saw on Monday's trade at the 0.6714 level, then we should see the price further extend to the downside toward this key 100-day moving average. And when we get below the 200-day moving average and the 100-day moving average, the longer-term technical bias shifts even more to the downside. So not only we have a bias in the short term and intermediate term more to the bearish side, but getting below those two daily moving averages increases the bearish bias from a longer term perspective. So that's going to be key through the FOMC rate decision. Keep that in mind. 200-day moving average, 100-day moving average, get below both those levels, increases the bearish bias from the longer term perspective. Now, what would happen if the Fed is more dovish, or there is some market tilt toward the dovish side after the FOMC rate decision and the Aussie versus US dollar moves to the upside? Well, technically, we need to get back above the 100-hour moving average. That level comes in at 0.67579, and then we'll look toward the 200-hour moving average, and you might add the 38.2% retracement and move down from last week's or the July high to the low here that we saw just on Monday's trade. So getting above both those levels would increase the bullish bias. Recall from right here, the end of trading yesterday, the price did move up to test that 200-hour moving average, only to find sellers pushing the price to the downside. So there is some resistance against that 200-hour moving average more recently today that could give sellers an opportunity to sell against that level, but if we move above it, it's going to be more bullish. Above that level, we'll be looking toward the 50% retracement of that same move to the downside. That level also happens to correspond with some other swing levels. I talk specifically about this low right here, these lows through here, somewhat there. We move below the level here and use that level as resistance, but then we reestablish support here before moving to the downside. So lots of support level that now becomes resistance near the 0.68044 level. So that sort of tells a story, or it does tell a story, of the Aussie versus US dollar. Right now, the sellers are more controlled below the hourly moving averages, but we need to get below those daily moving averages to increase the bearish bias going forward. Conversely, if the price moves above them, and then above the 50% retracement, things could be looking a little bit more bullish for this currency pair as well. So we'll see what happens at 2 p.m. and through the FOMC chairs press conference at 2:30. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.